Hello and welcome to Startup Street. I'm Arundhati Ramlin, and with me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup world. Mamaearth parent Honasa sees a tepid start to its Dalal Street journey. Stock lists at less than a 2% premium on NSE. Mamaearth employees and qualified institutional buyers had led the bidding process. Retail investors were largely cautious. Once America's most valuable startup at $47 billion, WeWork Files for Bankruptcy Protection is now worth less than $50 million. The company's business in US and Canada will get impacted. WeWork India says they operate independently of WeWork Global, adds that their operations will not be affected. Logistics unicorn Express Bees raises $80 million from Teachers Venture Growth, the late-stage venture and growth investment arm of Ontario Teachers Pension Plan. The firm will expand its offerings through selective inorganic acquisitions. SureTech, a cybersecurity solutions provider, raises $8 million in a Series A round led by Omidyar Network India, Narottam Sheksaria Family Office and Ulterior Capital. The funds will be utilized to scale its global operations and go-to-market strategies. Binny Bansal launches an AI-as-a-service startup. Bloomberg reports suggest it will target global customers. Bansal has hired 15 experts for the venture, mostly artificial intelligence scientists, and plans to quickly add more. Meta is barring political campaigns and advertisers in other regulated industries from using its new generative AI advertising products, denying access to tools that lawmakers have warned could turbocharge the spread of election misinformation. Bumble's founder, Whitney Wolfe Herd, will step down as CEO and hand over the role to Lydianne Jones. The CEO of Salesforce owns Slack. She will take over on January 2nd, while Wolfe Herd will remain executive chair. Those were the headlines that we're tracking for you this evening. But the big story today, it was a muted D-Street debut for Mamaearth's parent company, Honasa Consumer, with its shares listing only 2% higher than the offer price. The stock closed with gains of 4%. Remember, the initial public offer was subscribed over 7.6 times, led by strong interest from institutional investors. Chairman Varun Alagh believes that all their brands have the potential to be over 200 crore rupees. Listen in.
From a company growth perspective, like I've said in the past, we strive to grow much faster than what the industry is growing at, and we have done that in the past, and we'll continue to showcase and deliver that in the future as well. And second quarter results should be in a few weeks, and so we will come and talk to you about those results when we have them.
Ultimately, it's all about the path to profitability, right? So if you look at it, in FY23, there was a loss of 150 crores that the company reported. In Q1 of this year, of course, there was profitability, but I'm trying to understand that by the end of FY24 and 25, can you say with a fair degree of certainty that the company will report profits?
I think what I would say is that what we have turned and seen, even in FY23, there is an exceptional item because of which you're seeing the loss. Otherwise, we were EBITDA positive, although it was only 1.5%. And from there, in Q1, we've already moved to 6%. And all of these movements are structural movements where we are clearly seeing, leverage kicking in both on marketing and on OPEX. And we do, we will continue to sort of work towards ensuring that this remains a consistent trend over the years to come.
Just about your ad spends, they've reduced to around 35%. What can we expect going forward as a percentage to sales when it comes to ad spends for the company? And do you think that that would probably impact your sales as well as your margins? Margins possibly, positively, but your sales probably negatively.
If you look at the ad spend ratios from 40% 2 years back to 35% now, also needs to be seen with the context that during this time we have continued to deliver significantly better growths compared to industry while bringing this efficiency. Right? And this efficiency is also needs to be seen as a sum of parts. Right? 2 years ago, we only had 2 brands. Right? In the last 2 years, we've actually gone on and built 6 brands in total. Right? So the spend has actually been happening on 4 more brands which are in young invest mode. Right? And still the percentage has come down.
In your current business, Honasa, how many brands of yours do over 200 crores of sales right now? And how many are likely to cross that 200 mark over the next 1 to 2 years? Could you give us a sense?
We genuinely feel that all of our brands have potential to become 500 crore plus brands over the next 3 to 5 years.
Varun, just a 2-part question. One, would you probably look to even divest any of your brands after they reach maturity? Maybe if you get approached with a good valuation, would that possibly be on the cards? And secondly, you aspire to grow 2x higher than what the industry is growing at. As the person running the business, what's the biggest headwind according to you?
At this point of time, we are not looking at divesting anything, but in future, we don't know how we look at things. Right? We are in this for decades. We want to build this company and brands for decades. Right? From your second question perspective, I think we are at least not seeing any headwinds as we speak. Right? We are growing very strongly, right? And we see a lot of opportunity. BPC category continues to grow very well.
Moving on, real estate platform Housing.com announces strategic investment in Easiloan, a fintech startup focused on digitizing home loan offerings for an undisclosed amount. Now, the investment is seen as a step ahead towards Housing.com's plans to be among the digital home loan organization platform. Joining us now to discuss the investment and the road ahead are Dhruv Agarwala, the Group CEO of REA India, and Pramod Katuria, the founder and CEO of Easiloan. Gentlemen, thank you so much for joining us on Startup Street today. Dhruv, let me start with you. Housing.com is making a strategic investment in Easiloan. Why Easiloan? What are the synergies that you're seeing with the company?
So first of all, Arundhati, mortgages for us is a natural adjacency. We do get a lot of inquiries for home loans on our platform already. So it made sense for us to look at this as a big business vertical for us going forward. Easiloan has built a seamless platform which basically allows consumers to compare, select, and process loans digitally in a seamless manner. And we believe that coming together, especially given housing's large consumer base, as well as its large network of brokers and developers, it's a perfect marriage, which allows us to actually create India's leading home loan origination platform over the next several years.
Right. So you think this is the natural course of things for you to enter into the mortgage space. Pramod, you only started Easiloan in 2021. So talk to us about the kind of benefits you see from this investment. How will this partnership help you scale your business?
Yeah, so it's been a great partnership, and we are very excited to have tied up with Housing. So one was looking for funds, and when something strategic comes by, like Housing arrangement with us, we've got benefited 2 ways. One is our ability to now invest into tech and make it more deeper, broader, and our ability to add people, go into new markets, set up new channels. But also the fact, as Dhruv alluded to, the access to the huge network of brokers, developers, and the retail customer on Housing will also be extremely beneficial for Easiloan, because we will end up dovetailing with the home loan, Housing as well as home loan offering together.
Right, absolutely. Dhruv, I know this is an undisclosed sum, but I have to ask you, how much are you investing? What's the kind of stake that you're getting, and how big of an opportunity is the mortgage space in India at this point?
So Arundhati, we haven't disclosed our stake and investment quantum for strategic reasons. But look, at the end of the day, the way I see it is that this particular investment for us can be a game changer. As I mentioned before, we have a large network of brokers we have a large network of developers and helping them to augment their business by sharing home loan leads with us, which we can then process through the Easiloan platform, will enable us to increase business for our consumers, for our customers, and thereby also increase business for our platform.
Absolutely.
So we are very excited about this opportunity, and we believe that going forward, given how lending is becoming increasingly digitalized in India,
Right.
And the way home ownership is growing, we think mortgages is going to be a big business and a natural extension for our real estate business, as I mentioned earlier.
Absolutely. And Pramod, Easiloan is a digital home loan marketplace. So talk to us about quickly what's on offer, the traction that you've seen so far, and what are the kind of revenues you're clocking?
So we've seen a huge amount of disruption in fintech products. Home loan was one product which hasn't seen that amount of integration on the tech side. And that's the problem we picked up. So essentially, a customer can come on Easiloan platform, access 20-odd bank stroke and BFC offerings. The onboarding and the entire processing end-to-end is digital in nature. And so which is where we get the efficiency on turnaround time as well as the processing, as well as the convenience to the customer. We've been able to scale into 3 markets over the last 2 years, and we have done some great networking over the real estate developer mandates. Going forward, we are looking at starting the channel with brokers, DSA, as well as doing a B2C digital onboarding of customers.
All right. And Dhruv, your core business has seen significant growth in the last financial year. So talk to us about where your revenues are currently at, and where did you see most of the growth coming from, and how will Easiloan help generate more revenues for you?
So we closed our last financial year, which ends in June, actually, at around 450 crores of revenue. And I think a lot of the growth going forward is going to come from our core listings business on the housing.com platform. We see that market growing organically. We've also seen our market share increase in that over the last couple of years. So we are very positive on what that holds for us going forward. Easiloan is an addition to our portfolio of adjacent services that we offer on our platform today. So the way we look at the entire the entire buying and renting journey, there are many steps to that besides just search and discovery. So in order to cater to consumers across the entire home buying and home renting journey, we have multiple products on our platform, such as pay rent, home improvement services, online rent agreements, etc. And mortgages, we believe, is that natural extension to the home buying journey, where essentially when people buy a home, they need to finance it. And there's no reason why they should be financing it through an alternative platform, and they should be coming to housing.com. So towards that end, the partnership with Easiloan, which is basically a complete online platform, which allows for seamless processing of loans in the digital medium. It's a perfect partnership because leads originating on housing can then be passed on to Easiloan, where the loans can be processed in a seamless and digital manner.
Right. And Dhruv, if you could quickly tell us, what's the inorganic growth plan? Are you looking at more partnerships like this? Are you in talks with other companies?
So look, we keep receiving multiple offers for investment as well as acquisitions, and we keep evaluating them. And whenever anything makes sense for us, and which is a logical extension of our offerings, we will continue to evaluate and look at stuff. But for the moment, I think it's very, very important for us to put our heads down and make sure that the Easiloan investment is a success and benefits both the Easiloan as well as housing.
Absolutely. All right, Dhruv, Pramod, thank you so much for joining us on the show. We're completely out of time, but we wish you all the best going forward.
Thank you so much.
Thanks, Arundhati. Enjoyed being on the show. Thank you.
Thank you. On that note, it is time for us to head into a short break. But coming up next, WeWork files for bankruptcy protection. We tell you all about the company and their journey on the other side. Stay tuned. To the future. End of quote. Founded in 2010 by Adam Newman and Miguel McKelvey, WeWork bought long-term leases on office buildings and sold short-term memberships to offices equipped for co-working. Newman rode a wave of venture capital frenzy, positioning the office rental company as a tech company.
Most companies in the world run their company with quarterly earning reports. And when I'm going to make a decision, this is true about life and true about a business. When I'm going to make a decision based on 3 months forward, I'm not going to make the right decision. Masa is very famous for making a 300-year plan. If you want to start thinking forward, you really have to think really far away.
SoftBank owned majority stake in WeWork, sinking about $18 billion into the company. Ahead of its IPO in 2019, Masayoshi Son was upbeat about WeWork's prospects.
They're growing so quickly, and they're investing into the capex, right?
Yep.
But it's a recurring revenue. It's an ongoing recurring revenue. It's like a subscription. Facebook was losing money even post-IPO for a while. And once they start making money, it's dramatic.
But the IPO turned out to be a dud. WeWork's valuation got cut from $47 billion to about $10 billion. Adam Neumann was in the line of fire with allegations of corruption and lack of corporate governance. Neumann was forced out of the company. SoftBank pumped money yet again to revive WeWork, but the COVID-19 pandemic and lack of demand for office spaces became the straw that broke the camel's back. WeWork saw its losses quadruple in 2021 to a whopping $2.1 billion in the first quarter of that financial year. Years later, in its most recent filing, the firm managed to bring its losses down to $397 million. Amidst these developments, WeWork India's CEO Karan said that the India operations will not be impacted. Embassy Group holds 73% stake in WeWork India, while WeWork Global holds only 27%. Virvani said, and I quote, "We will continue to hold the rights to use the brand name as part of the operating agreement while serving our members, landlords and partners as usual." End of quote.
Come with me and let's build the future together.
Oscar-winning actor Jared Leto played Adam Neumann in an Apple TV series titled We Crashed. Leto had one piece of advice to Neumann about the series: do not watch it.
Said to him, "Don't ever watch it," and which I stand by. You know, I mean, there's really no reason. First of all, he lived it. Why live through it again?
In Mumbai with Jagriti Potfore, Arundhati Ramnin for CNBC-TV18.
Chennai-based South Indian snacking brand Sweet Karam Coffee has announced that it has raised $1.5 million in funding from Fireside Ventures. The company plans to use these funds for offline expansion, getting into new geographies and strengthening its product portfolio. Started in 2015 as a home kitchen, making traditional snacks with an investment of just 2,000 rupees, the brand has since grown to become a $1 million company. Joining me now on the hot seat to talk about this journey and more is its co-founder and CEO, Nalini Parthiban. Nalini, thank you very much and welcome to CNBC-TV18. Thanks for your time here. If you could start by telling us about Sweet Karam Coffee, how you went on to become a $1 million brand, what the journey has been like and what's the story behind it?
Thank you so much, Ritu, for having me here today. It's my pleasure to be here. Sweet Karam Coffee is not just a brand, but an emotion in South India. It is actually a ritual, especially in Tamil Nadu, where you start with a sweet and then you move on to a snack, which is also called as Karam, and then you end it with a piping hot filter coffee. So hence the name Sweet Karam Coffee. We are a Chennai-based brand, a destination brand for authentic, clean South Indian delicacies, free of palm oil or preservatives, and made, just like the way our grandmothers used to make in the olden days. We started way back in 2015, with really very low investment. And we've let the brand grow organically and, till it reached $1 million bootstrapped mark. And, COVID came and accelerated our growth. And since then, we have doubled year on year our growth.
Well, give us a sense of how many deliveries you're clocking in on a monthly or an annual basis, and what does that mean in terms of your revenue and profit currently?
Absolutely. We've grown phenomenally in the last, couple of years, and currently we are doing close to 10,000 to 12,000 orders per month, and all this purely on the strength of our, our website and app. So-called the pure play D2C brand that we are. Our average order value is close to 1,000 rupees, and we are seeing a 30% month-on-month growth in terms of the orders and the revenue. Currently, in terms of the revenue, we are roughly in the scale of 15 to 20 crores ARR this year, and and the profitability, the unit economics is very strong. We are CM2 positive brand across all channels.
You're looking to expand, strengthen your portfolio, but where are you looking to go? You're in 32 countries and in India.
In terms of deployment of funds, we're planning to pull 3 key levers. One is channel expansion. In terms of channel expansion, currently we are online heavy. When we have seen so much traction online, we want to take this traction offline. So retail is going to be a universe where we'll submerge into. And so that's channel expansion. We want to go offline aggressively and strengthen our distribution. In terms of product expansion, we have a beautiful assortment of Tamil Nadu and Kerala delicacies right now, of sweet snacks and filter coffee and more. But we want to expand this across Karnataka and AP. And in terms of team building, we are looking at building our capabilities in-house. We are currently a 30-member team, plan to build capabilities in branding, marketing, as well as in our R&D and very strong quality control processes.
How much of the growth could come from your offline presence? Because so far, like you said, you've used only your website and application to achieve this growth.
Absolutely. We envisage that in the years to come, it'll be easily a 50-50 mix in the next 1 or 2 years to come. In terms of offline expansion, we are planning to go retail heavy, as I said. And in the next 1 or 2 years, expand our international frontiers. We are seeing a very, very big pull from Middle Eastern and as well as from the US, Canada regions. So offline expansion is going to be key in the coming days. And in terms of online, we also see a very good pull from marketplaces and quick commerce channels.
Okay, and Nalini, what would you say your end goal with Sweet Karam Coffee really is? Because, there are deep-pocketed players in this segment. Would you look at inorganic growth opportunities, or would you look to sell to a player to achieve bigger distribution, partner with someone? What's the long-term vision?
We know that there are big players, but this is according to the Bikaji recent IPO report. This is approximately an 18,000 crore market. So there is a huge and growing year on year. So there is scope for many more players to come in and make their footprints. And we are a differentiator in terms of authentic, clean brand, as I said. So there is scope for a lot of things to do right now in terms of building the teams, building the product portfolio, strengthening our distribution. So, it's a little bit too early to comment at this stage. Currently, the focus is on, making this Sweet Karam Coffee as a global FMCG brand of South India. So, as a singular voice of South, as I said. So, there's that huge white space that we're looking at bridging right now, and we'll cross the bridge on these parameters when it comes.
Thank you very much for joining us here on CNBC-TV18, and we wish you all the very best with your venture. Thank you.
Thank you so much, Ritu. It's a pleasure to be here. Thank you.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.